Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Andrew Upward. He's the ETF strategist over at Jane Street, and we're going to be talking about the second annual Global Institutional ETF Trading Survey Report. Andrew, it's great to have you with me at MarketSite. So tell us more about the report and who commissioned it.
Sure. So Jane Street is a global liquidity provider. We trade instruments all around the world with institutional investors every day. So in that role as a provider of liquidity to institutional investors, we thought we would ask some of those investors how they are seeing trading trends in terms of how they're actually trading ETFs develop over time. And so that's what we did. We went out and we surveyed almost 300 institutions to ask them about how they're trading ETFs.
All right, well, let's review the 5 key findings, starting with the first one. How do institutions feel about liquidity?
So before I get into the details of some of the survey, and I agree there's some really interesting things that came out of that, 2 of the bigger themes that we saw come out of the survey, which we thought were really noteworthy. The first one is there seems to be a best execution story that's bubbling to the surface in the survey. And that's simply institutional investors really focusing on getting the best possible price on every trade they do. That's number one. Number 2 is there seems to be a shift in mentality in terms of how institutional investors are thinking about the liquidity of an ETF. And to be frank, they're starting to look more at the liquidity of the underlying assets as the primary criterion for what makes an ETF liquid. So those are the 2 main things. One of the main findings, obviously, was that ETFs are, according to the survey respondents, getting more easy to trade, which is great.
And it's unusual. You never hear anything positive about liquidity.
It tends to be negative narratives, I think, that make better headlines. But institutional investors are telling us that they're having an easier time trading ETFs.
All right. Now, how do they select their counterparties?
So competitive pricing is something that really came to the surface when we were looking at the survey. That simply means that when an institutional investor is selecting a counterparty, the number one thing that they're focused on is who can get me the best price consistently. There's a lot of different things that go into a buy-side trader's kind of internal algorithm in terms of who they want to trade with and what they want to accomplish with the trade. And simply getting the best price, I mentioned best execution earlier, seems to be coming to the fore as something that's really important to those investors.
That's really interesting intel because we never get to hear through the lens of a buy-side trader or portfolio manager. So in addition to best execution and best pricing, are there any other parameters that you saw that came up consistently in terms of selecting a counterparty? Yeah,
so the ability to do size and to handle complex and sometimes really sizable trades is also something that they really value in a counterparty. So, you know, market makers, independent market makers tend to specialize in those types of trades. So that's another thing that they're looking for.
Because I would imagine some of the smaller institutions or smaller hedge funds almost look at the market makers or their sell-side counterparts as an extension of their team or of the research. So speaking of improved liquidity, you're seeing size grow as well then?
We are actually. One of the things that we asked them is, what is the biggest ETF trade you've done in the last year? And we saw an uptick in the number of respondents from 2017 to 2018 saying we've done a trade of $100 million or more. I think the percentage delta was 3%. I think it went from 21% to 24% of the respondents said we've actually done a single trade of $100 million or more. That's pretty incredible. Just earlier this year, we did actually what we think is the biggest ETF trade of all time. We facilitated a switch of $5 billion worth of one ETF into a similar ETF that has a similar exposure. So the ability to conduct sizable trades is growing, and we're right there at the center of it, which is really exciting.
And we touched upon this before, the preferred counterparty then, you're seeing it go to the market makers.
So there are a number of different types of players in the market. And, you know, it's a tailwind for our business, and certainly something we were happy to see that they're increasingly looking at independent market makers such as ourselves to handle some of these bigger and more complicated trades.
All right, and the 5th finding was RFQ. What is that, and what did the study find out?
Request for quote is what RFQ stands for. And this is essentially software that allows the buy-side trader to go out to multiple dealers at one time to request a market. So symbol XYZ, hey, Jane Street and dealer XYZ and dealer ABC, please give me your best 2-sided market for $50 million worth of this ETF. Dealers come back, they submit their two-sided markets, and that allows the institutional investor, the buy-side trader, to choose the best quote from among the three. So that also plays back into this best execution theme.
So how are institutions using ETFs? Is it just passive, or do they actively manage?
It's a mix. It really is. I think it's surprising to some people that it is part of the actively managed story as well. People are using it for tactical allocation. Increasingly, people are using it as a core part of their portfolio. So people saying, look, I want access to this part of the emerging markets. That's difficult access to get, but here's this ETF that can give me that exposure. So I'm going to use this ETF and keep that as a core part of my portfolio.
All right, and to wrap up here, what are you going to be looking at for 2019? Do you think we'll get a repeat of 2018 or some new trends might emerge?
I think it's going to be more of the same in many ways. I think the focus on best execution is going to continue. One thing that we see increasingly is a focus on transparency. That comes in a number of different ways. It comes across. For example, in Europe, they're actually thinking about constructing a consolidated tape so that people know exactly what trades have happened in essentially real time. That transparency element is something you're going to see come up time and time again, I think.
That'll be fun to build.
Exactly.
All right. Well, thank you very much for joining us at MarketSite. Some really good intel on the buy
Thank
side.
you.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.